We hope everyone's New Year's off to a good start. We're in an interesting time of the year just because in the real estate market, everything's kind of fresh again, and we have a new outlook for the year 2020. So Dane, how were your holidays, your Christmas, your New Year's, everything?
It was fantastic. Holidays was always good to see, family and friends, and it's always good to see the young kids around Christmas time, right? It's full of excitement and lots of candy flowing around. So
yeah, for sure. It's more about the kids than it is about us at this stage of our lives.
Absolutely, absolutely.
For sure. So let's dive right in. We've got naturally kind of an exciting time coming up ahead. The year of 2019 has wrapped up and all the new data has come out for that. Eitel Insights has completed its analysis for 2019 and also its prospectus for 2020. So maybe we can start actually with the month of December before
Sure.
we look at the whole year holistically. So in December, kind of what's happened as far as the expected trends? Did anything kind of go a little bit unexpected? Can you give us a summary of what's happened in the average sales price of the Greater Vancouver Detached market?
Yeah, well, I wouldn't say anything's unexpected. The market data is driven by the market psychology or sentiment. That being said, we are very much on the top end of our chart. So why don't we just toss that up here on the screen? And basically what you see is that the average sale price for December came in at $1,670,000, which is a little bit of an oddity. Usually in December, you kind of have a nominal kind of spell where it stays relatively the same. So, of course, we took a deeper dive into it, which we always do, and say, well, what really comprised of this growth spell all of a sudden? So out of the 22 areas that make up Greater Vancouver, there was really only about 4 major ones that had any increase of any consequence. Most of them actually lost significant sale price value or stayed relatively the same. So of the 4 that were kind of interesting, West Vancouver rose $300,000, which isn't really out of the realm of normalcy. That sales price is around $3 million, so a 10% jump month over month, in the grand scheme of things, isn't the end of the day. Port Moody actually had a fairly significant sales price jump. However, it was only with 9 sales. And similar with Coquitlam, had a decent rise in the average sale price. The one interesting thing about the Coquitlam market, there was actually 2 major sales that took place earlier in the year and actually had completions later on in the year, probably for tax reasons. And those were likely to do with a future potential townhouse development coming on board. So it completely makes sense. But then we had one that kind of came right out of left field, which was Pemberton. There was one sale that took place on record, and it actually increased the sales price by $645,000, which is kind of like a wow moment. So it went up to 1.340 over the 1 month span, again with the one sale. So that was really the impetus for why Greater Vancouver rose to such a degree, to the 1.670 overall sale price.
Sorry, so just to be clear, a single sale in Pemberton affected the entire chart.
Absolutely.
Okay,
So what we did was we actually took Pemberton, that 1.30 out and put it back to a realm of normalcy. We called it at 700,000, and that actually impacted the average sale price quite a bit from 1.670, and it came back down to 1.580. So $90,000 of an impact from that one increase of $645,000. So Bulls and Bears, totally fine and fair, whatever the perspective is, but we don't think that Pemberton will be this market that kind of holds the Greater Vancouver hopes to this degree going forward. So we can probably expect to see a fairly snapback movement in January, unless Pemberton is really taking off or other markets start to do as well. So that kind of is an anomaly, and we've had a conversation actually in the past, and we had a conversation just before we came on recording about what would this do in the median chart? Would this anomaly show up? So of course we took a look at that, and just before we get into what it looks like, what's interesting in my opinion and majority of the company's opinion, a chart is always chartable, right? Whether it's mean, average, or median or average, or a retail chart, or whatever the chart may be. It's about corn, it's about coffee, it's about the Dow Jones Index. Any chart is chartable, can be technically analyzed, of course. So we did pull up the median chart, and it's actually very similar. It's in the upper edge of the downtrend that's prescribed for it. So kind of not a whole degree of difference, which does stand to reason. And then just one other interesting point, throughout the week, it's a little bit quiet around the holidays time. So I was on, I believe it was the LinkedIn channel and of my site, and a retail chart came across my screen. And that was really interesting of Greater Vancouver. It showed really an aggressive growth trend and then a very much of a peak. And now we're in this cyclical range, a selling cycle, if you will, and very much near the bottom of that. So if that kind of falls off, which would stand to reason that real estate will kind of follow suit, or real estate is the impetus for why this retail is falling off, especially here in Greater Vancouver, where real estate really does drive the economic value of the overall province. So it's just an interesting thing. We love charts, as everybody knows here at Eitel Insights. So, but yeah, as far as the December data goes, it's 1.670 as the average sale price, right up against that kind of upper echelon of the downtrend. We do anticipate to see the first quarter go significantly lower than 1.670.
Yeah, for sure. And for the listeners who are already familiar with these concepts, if you'll just bear with us, I'd just quickly like to explain the difference between a mean and a median for the people who don't know. So just for the sake of argument, if we use some simple numbers, if we're selling, for example, if we're selling 4 different pens, right, and 3 of those pens cost $1 and 1 pen costs $10, the average is going to be quite a bit higher than $1. But if you actually look at the mean, if you look at the middle pen that's sold, it's actually, excuse me, if you look at the median, it's the median price of those pens is actually $1. So this is why these kinds of analyses are important. And when you see kind of an outlier like this, like the Pemberton sale in particular, it's nice to have both charts in front of you so you can kind of decide for yourself what's most relevant to your analysis.
Right, and here's the kicker about that individual, statistical. Yeah. With one sale, it doesn't make a heck of a lot of difference, right? Because it is the median and the average, right? So that's why it kind of does show up on the median chart as well. Yeah. We'll just give you kind of an example of the month before. There was 2 sales. Average sale price came to $695,000, I believe it was. So, when you throw in an extra sale in there, of course it helps. You throw in 2 more, and then it helps to a further degree, right? So totally to your point, there is a difference between median and average. It's kind of about your investment mentality of how you like to do it. We do offer the median chart. We just don't really use it here. I personally believe more about the average price, but some of our clients believe more in the median. And of course, we offer that to them as well.
Yeah, for sure. So if we kind of take a bit more of a bird's eye view in 2019,
right?
So kind of what happened overall in 2019, and can you speak to some of the media reports that people might have come across as far as the assessment of the 2019 data and what the media is saying about 2020? So instead of an individual month, let's go year on year. And
sure, let's just kind of take a look back at how 2019 came about. So as you have alluded to, the assessments have come out here for 2019 in most people's mailboxes. I don't really think anybody was really particularly smiling about their new assessed value. And here's kind of the kick. Unfortunately, those assessments were of sale that took place right around summertime, right? Mm-hmm. So we prescribed the market to go lower further here into the first quarter of 2020, mm-hmm. and that was during the summer of the year before, right? So assessments don't change on a monthly basis. It's really a snapshot of the summer month market of sales that occurred around you in your neighborhood. Now, if there weren't too many sales, or there were not too many sales in 2018, which was more than likely, and there were more in 2019, mm-hmm. just simply because of stress test mitigation and a number of other factors, there was a real kind of a shock value, because maybe 2018 didn't change that much from 2017, simply because there were no sales. So there was no new data to put it into this assessment kind of calculator that they come up with, right? Yeah. So now that's kind of story's over. What's interesting to me just about the 2019 year over year, we started the year at 1.6150 was the January average sale price. We actually finished off at 1.670, which is higher, right? So it if you just take that one snapshot, it looked like it was a positive year. However, the actual average sale price, including this 1.670 relatively high sale price in December, the overall average sale price of 2019 was $1,565,000, which we'll actually put this chart up on your screen. It's the black dot. There is no connection between the previous month or anything like that. It's just where the whole average sale price is, the most recent data. So we'll put that up there right now. And it's right up against that 10-year uptrend again, just below the yellow middle threshold. Very interesting. We love data. We love it when our charts kind of produce something that's salient, and we really do agree with that. That's basically what 2019 kind of boiled down to for us, was a few tests. Basically, we defended the 1.480 lower third that we prescribe on the charts, and the kind of, you can see with the oranges. So in February of 2019, we actually did test 1.470 very interesting, and we actually did prescribe that back in 2016, 17, I believe, in one of our publications, and we said this is going to be the peak. You will experience in 2019 a probable test of 1.480. We didn't know how correct we would be, like to the nth degree, but 1.470 is pretty darn impressive, right? So we are obviously very excited and proud of that throughout that year. And then so that kind of held ground and got tested a few times along with that 10-year uptrend. So for me, that's what 2019 took, or what took place was a temporary bottom or a defense against going below 1.50. So as we say, ended up at 1.565. Going forward, we actually do believe that we're going to break that 10-year uptrend again. It could happen in the first quarter. We're going to get into some of these other numbers of the inventory and things like that. There's some oddities or some things that haven't occurred here over the last couple of years in the inventory with kind of the nosedive that it took. But we think we understand why that's occurring and what will actually occur here in 2020. So going forward, or just kind of even, like you said, going back to a recap, what did that mean from the year before? So 2018 actual average sale price was 1.680. And now 2019, 1.565, right? So still lower very much year over year, and probably why you see that realization in the assessment prices more so in 2019's numbers rather than 2018, simply just because there were more sales. And as we get into sales, hopefully you can remind me about that point, because there were sales that took place, and the media and the board really loved to kind of go year over year. Well, 2018 was just a horrible sales year because of the stress test, right? You got docked 20%, right? So, I mean, how are good things really going to happen when you just lost 20% of your purchasing power, right? Yeah. So they love doing that. However, in the recent reports, they're talking about a 10-year average for December, trying to kind of mitigate that. So it's interesting how they do it. We like to show our charts in a more of a holistic, and then we dive into kind of the nitty gritty of the charts. But we don't really ever show selective features. Those that have been following us and checking out our podcast, it's very always the same chart with just new data on there, right? So that's how we like to show our analysis is in the trends. The trends are still very much going lower, and unless you're in Pemberton, then it was a glorious December.
Unless you were the one seller in Pemberton.
You got it.
Yeah. And
congratulations, by the way.
Yeah, exactly. Well, I think that's an important point too. Like, if you actually look at the modal outcomes of some of these sales, it's, you can look at the outliers and they do affect the averages, but a lot of this kind of depends on what's going to come up for the typical buyer or the typical seller, right? So
and something that we're going to try and get into here in the first quarter of 2020 for Eitel Insights is more of a kind of a heat map going on, whether it's a month over month or a 6 month it's in the green or if it's in the red. And like we said, out of the 22 areas of Greater Vancouver, you would have seen a lot of red if that was ready correct, right? Or ready currently. So it's just interesting. And again, I don't get into all of the analysis that we do on a day-to-day basis or on a monthly basis, but 1.670 sent off some question marks in my head, right? So of course we go into the next step of checking all of the cities that we offer for Greater Vancouver. If we see that in Calgary for some of the Calgary clients, we'll check everything out in those areas, right? So not only do we work here in Greater Vancouver, we work across the country, and that's why we're kind of busy on a monthly basis, right? It's not just one data point comes in and then that's it. And even with the one data point, usually there's a lot of questions and a lot of fact following that goes on into the next chart, and that relays into what made up this holistic number.
Right, exactly. So, to abide by your wishes here, let's look at the sales numbers.
All right.
So, I think I'm
you didn't want to go too far so that you didn't forget, right?
Yeah, that's right. Yeah, because I almost forgot there for a second. But so what's happening with sales? I think both sales and inventory. That's what actually really piqued my interest from the discussions that we had prior to hitting the record button. But tell us a little bit about what's happened with sales.
Right. So, sales, we'll actually just toss the chart up here right away. So it's right down to 605 sales, which again on the chart seems to be at the lower end of this cycle that I've kind of prescribed, that we believe that it'll be in here, above the death mark of the January 2019 sales with only 344 occurring. So 605, we expect to see more inventory here in January and probably nominal sales growth or relatively the same. We could see something lower. Again, the market makes up what the decisions will be. But what's interesting is we did fall out of that growth trend that we had been in since January's horrible sales of 344.
So just to be clear, January of 2019.
Exactly, January 2019. And then we basically broke out, or we questioned it in November whether we're going to stay in this uptrend or break out of that topping of 950 sales, right? Which we've seemed to test here a number of times, and we've spoken about it in the previous podcasts. So yeah, we did break out of that, and we did break out of it fairly hard. One thing that to us is always interesting, when a technical feature is broken, you see an obvious and discernible reaction, right? Like, it didn't really hang around to question it. It says, yo, we're done. Like, we're done with this growth trend. There's no really way to snap back up into it unless we see, I don't know, maybe 1,100 sales in January. I don't anticipate seeing that in the detached market. So we kind of believe that trend's over, and now we're going to settle into more of a market cycle up and down, for at least the beginning part of 2020, and then we'll see how we go. We're still very much in the midst of the conservative downtrend that had been established basically in that 2015-16 kind of peakish market, and then now we're down into it. Very much actually closer to the lower end of that. So, and again, we do anticipate a rebound at some point in sales, maybe not in sales price, but definitely in some sales. And we one of the interesting things we did prescribe in earlier part, or maybe the middle part of 2019, was that some sellers should take advantage of the stress test mitigation. And what's interesting is those that really maybe took advantage of that information did very well. I mean, really, they actually got the sales through way better than 2018. Now, why is that? There's a natural effect that purchasers could purchase. But if you didn't take advantage of that, we believe that it's a need-based buying that was going on and still is going on. So once they purchase, they're kind of done. So you're not going to see a pent-up demand that we did see actually occur here at the end of 2019, right? So, congratulations to those sellers. We think they did very well for themselves, especially going from this point forward over the next 2 years, right? Especially in an average sale price and even in a competition factor. So that's just kind of a side note. So yeah, we're very much in this cycle of sales going on. We believe that we're right around that low end of it, and we should see a little bit of an uptick in January. However, we don't believe that this will be enough of an uptick to kind of sway the supply-demand factors.
Right.
In the demand factors, the supply has almost swung itself, and maybe we can get into that in the next few minutes.
Perfect segue. So
all right.
the inventory chart is actually arguably the most interesting out of all of these. So, upon cursory examination, it looks like it went off a cliff, but it seems like there's a little bit more detail there. Right?
There is, and we'll just toss that up again here right away. So basically, it did fall off a cliff from even November standards, where we were just below, let's call it 4,950 active listings, to December finished off with 3,500 listings. I mean, boom, gone. See you later. And that continues with basically breaking a technical indicator, right? So that we were in this kind of not aggressive, but not staunch or conservative uptrend. It was a real uptrend. And as soon as it broke, it said, see you later, we're done with this. Yeah. What I believe we're actually occurring here is maybe that very conservative uptrend, or some other people in the company actually think that it's more of a bottoming. So we could see a lowering inventory in January and then a rapid uptick later on in the year. In both circumstances, we believe the inventory is going to come back. We don't see that demand eroded this inventory by any way, shape, or form, especially with our previous conversation with the sales. That is what occurred here in the low of the end of 2015, right? So demand just took all the inventory, right? People were realizing in ridiculous sale prices, astronomical. It was glorious. What we actually think occurred in this last data point was seller's fatigue, right? So those that didn't achieve a sale, even though there were some sales going on, they're saying, you know what, forget about it. I'm going to enjoy the holidays. I'm going to enjoy the Christmas time, the holidays, the New Year's with my family, with my friends, without any of the one or two list that you're showings that we're going to get in the month. It's just not worth it anymore. We can reevaluate and talk in the new year. So that's what we think occurred. The actual total numbers came in at 3,527 active listings in the detached market of the overall Greater Vancouver.
Oh, sorry, Dane, just out of personal curiosity, does that trend usually happen every year where there's...
Absolutely. So there is a very much seasonal effect where later on in the year that we do see a lowering of the inventory, and then during the spring and summertime we see kind of a peaking out, right? Totally normal.
But not to this effect.
But exactly. You look at the chart, and the lows were probably put in December, right? I mean, but however, they were always higher lows. This is a lower low than we've seen in the last few years, right? So we explain it through to the seller's fatigue, just because the days on market that we'll get into here in a bit, that's rising. So there's nothing that was seemingly positive that there was a demand that picked it up, right?
Okay.
It's just people giving up and reevaluating the new year, and that's kind of again leading back to some of the not misreporting, but conveniently reporting of the data, right? Mm-hmm. So the convenient reporting was, oh my gosh, like we're up 48% on sales on a year-over-year basis. Yeah. Not talking about the stress test, the fact that we're down to stress test mitigation levels and that people literally couldn't purchase before, right? It was very conveniently. And actually, this report, they didn't even tout the average sale price, which is kind of odd to us. Well, I guess it's not odd to us because they've bought and sold their souls with the HPI, the house price index, which we've explained shows up late. Yeah. So probably 6 months from now, you'll see a spike in the HPI due to the December sales, and that's what they'll tout then, right? So I guess that's why they're not touting it. They just haven't seen it yet with their lagging data. But they're saying, the sales are off, but it's okay. It was December, right? So and it's odd and it's very convenient. Their statements. And again, we stay true with the data. And when it's an oddity, it is odd. However, there is an explanation. Again, it's definitely not due to the demand. We believe it's due to seller's fatigue, and that will actually be erased and showing up quite quickly. We think going into 2020, based on our previous conversation in the previous podcast and something that we've alluded to, I believe, earlier in today's conversation, prices in 2020 are not going to be that great. So we tested 1.50, 1.48 in 2019. We actually think that the next test of 1.50, 1.48 will actually be the straw that broke the camel's back. Right. The market held it up in 2019. Right. It just can't do it forever if you keep questioning the same question. Something's going to break, right? Yeah. So we think that dam will break, and we're actually going to go down to our next echelon, which is 1.40. And that could be the market bottom. Maybe without some of the overarching themes, it would have been the market bottom given previous years' averages. So if 1.40 doesn't hold, we go down to 1.225, which again wouldn't be the greatest news in the world, but that's what we believe going forward in 2020. Once that occurs at 1.40, we're back down to 2015 prices. You got your 5-year conversation about a mortgage coming up after you already increased your sale or your equity in your home, $400,000. Yeah. If you used any of that and now it's gone, what's the conversation look like, right? Yeah. The banks don't want all the inventory, but they will take some if it's egregious, right? So, and it's the whole market knows the economy's not doing as well as it was, right? So it's going to be an interesting year in 2020. We see the inventory going back up, and we're going to introduce need-based selling once we kind of erode all of those previous 5-year gains.
Okay. So just one last thing I wanted to touch on the inventory chart is, and this was news to me, and this is very illuminating to me, the way that you explained it right before our podcast, is that the inventory
numbers...
Well, I
hope I can explain it the same way again then.
Yeah, exactly.
No pressure, right?
Yeah, I should have recorded it there. But with all inventory data, it's so tightly coupled to days on market that you can't really look at one individually. And I think with the days on market, just like Newton's law, they say for every action, there's an equal and opposite reaction. So I think if inventory drops off a cliff, it'd be one thing if the days on market also drop. That would mean there's a high octane market. People are selling, people are buying.
And everything's relative.
Right, exactly. Yeah. But if inventory falls off a cliff and days on market are getting higher, what does that mean? And let's transition into days on market and what happened there.
Absolutely. So basically the days on market shot up from 57 days on market in November to 65 days on market in December, which can't be the case if we're down in inventory and the market's hot. Right. To your point, said perfectly. I'm glad I said it so great before, so that you
could... I guess the podcast's done. Right? We're over, so we'll see you on the next one. So what are you even doing here?
Yeah, exactly. Yeah. So what's interesting? Again, we're very much in that middle of the uptrend, right? So we've tested that lower end during the hotter parts of the market. Now, what's odd about hot parts of the market? That's when the inventory shows up, but the sales show up too. Everyone says spring's the best time to sell. Well, it is and it isn't, right? I mean, we do a lot of data, so we got a lot of data that says, yeah, it's an okay time for some rationale, but maybe not for the other, maybe necessarily just prices. Where it's a great time is the activity, right? So you do have the more inventory, but you also have the more sellers or purchasers, of course, right? You got a couple more desperate listings that show up on the market. You got some grateful buyers that snag them up. But then you got some overweighted listed properties. Nobody's touching those with a 9-foot pole, right? So the inventory continues to grow, but the activity is there. The realtors are busy. The market's at least humming along. So that's why it's a great market, not necessarily just driven off of sales prices, right? So that's when the days on market do go, because you get, the odd one that sells in a week. If it's listed properly and you got a motivated buyer and seller that get together, that's one gone. That doesn't create a market, right? So that's why the days on market still, even year over year, in their best points, are continually rising. And where we sit in December, again, 65 days on market. One other curiosity, when we kind of just do a year wrap up, where were we in 2019? So 2019, at the beginning, it was 64 days on market, right, in January, which is interesting that we finish off at 65. One day above, even given the better sales prices and all of this kind of bluster about a good market with less inventory. The days on market, we can probably expect to stay somewhat relative in January, unless we do see that total increase in inventory right away. Now, what do we expect for 2020? We expect to see the rise of inventory. We do expect to see the sales stay somewhat normal, right? Like we don't expect them to fall off a cliff. There's no other precursor to say that you can't buy. The government actually wants the market to go, right? They're a little bit hurting right now, and that's no wonder why. Well, you got no property transfer tax income coming in. Exactly, right? So you can't have your cake and eat it too, right? That's a challenge. We expect everything to kind of stay the same way, but that's a negative trend, right? So we expect lower sale prices to continue to go. We expect a higher inventory to kind of permeate, and the more desperate sellers actually will start to show up. 2020 will be a negative year, and 2021 will be probably the culmination of all that negativity, and then we actually reach a bottom and start to rise up again. So it's an interesting upcoming year. Yeah,
for sure. So we're just about out of time. We wanted to do a little bit of a more comprehensive podcast just because we wanted to tackle the year-end numbers here. But before we sign off, any interesting developments with Eitel Insights? I know we talked about kind of a new pricing model for some of your services.
Right. Well, you know what's interesting? I mean, the company's growing exponentially. I mean, the popularity and the response that we got based off these podcasts has been fantastic. So,
it's been amazing.
Thank you everybody that's listening and smashing that subscribe button and giving us a thumbs up. We do appreciate it. So what was kind of that became obvious or prevalent was that there was a request for monthly information, right? Our static reports go for $250, which does give you a forecast. However, they said, we want another update a month or two out, or at least at the quarter out. So we are offering monthly updated reports on any area for $1,500, right? So it sounds like a little bit of money, which it is, no doubt about it. However, the $250 is $3,000 on a monthly basis. So we basically cut that in half, and you get monthly information. The information that we bestow is really hundreds of thousands of dollars of savings if you look at it, or winnings if you think about it as well. We had our early adopters that sold at the peak of the market in 2016. They're up hundreds of thousands of dollars, right? So an investment is an investment. However, we've had the track record that says, your investment will pay off handsomely in a variety of ways. So that is something that's interesting. Of course, we do offer the static reports, and of course, we offer our consultation at different levels as well. But for those that have been requesting monthly information, we do have it available now. It actually is on our website, so you can actually choose between the static report, which is a one-off, and then our monthly subscription. And if you want further business offerings, get in touch with us through the email. You can email me directly at dane at Eitel Insights. Always happy to hear from the fans, the followers, and even the few detractors if they got any thoughts that they want to send. It's all right. Sure. It's all good.
Constructive criticism is always welcome. So like you said, if you want to get in touch, eitelinsights.com. Thanks everyone for listening.
Happy New Year to those, and we hope that you had a good end to 2019 and a great start to a golden year that 2020 will be.
That's right. So Happy New Year. If you found this podcast useful, hit that subscribe button, smash that like button, and we'll see you on the next one.